Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia.
Good evening, everyone. I'm Wwatch. Here's a look at the guests that will be joining in over the next half hour. Tushar Mahajan, head of derivatives at Nomura India, will be with us on the show. There's Ashwini Gujral, fan manager at ashwinigujral.com, and Sandeep Sabharwal, market expert. Sandeep, we'll start off with you. I mean, a lot of experts we've been speaking to, as Nikunj said, that the expectation is that the tapering will be rather light. Some of them say there may be no tapering at all. But run us through what kind of implications this will have when it comes to the fund flows for emerging markets, particularly India.
I think in terms of tapering, the no tapering scenario I don't think exists, because I think it will be playing too much on the credibility of the US Fed. So tapering is going to happen. And unlike a lot of policymakers, the Fed doesn't believe in surprising the market. So what I think we are most likely to get is a $10 billion cut down on the bond buying. Now the implications for those on emerging markets would be that a large part of the event gets factored in before the event happens. So I think that's what we've seen happen in 2-3 months back when this entire announcement happened. And now what we have seen actually is that most of the markets are actually trading above the pre-tapering announcement levels. So I think the basic tenet now is that globally economies are improving. We have seen improvement in the Chinese economy, we have seen improvement in the European economy, the US economy is improving. So a lot of economies seem to be improving today. India is in another basket where we don't see improvement in economic indicators as of now. But globally there is an improvement in the overall economic scenario. And that typically will be positive for equities. And what we've also seen lately is that a lot of strategy notes I've been reading which say that a lot of brokerages are actually going overweight on Eurozone equities, with PIGS equities being the most favored basket. If you go back exactly a year back, PIGS were supposed to go down and Euro was supposed to go to 1:1 vis-a-vis the US dollar. So that didn't happen. So I think a lot of the fears as far as emerging markets go might not play out over the next 1 year. So I don't think one needs to be extremely bearish or negative on whatever comes out. I think markets are more likely to consolidate rather than move down drastically, irrespective of whatever the announcement is.
Well, Sandeep, there's a old maxim in the market that prices, they go up and down in regions they follow. A year ago, everyone was bullish on emerging markets. Beginning of the year, everybody was negative on China and bullish on India, but surely that opinion has changed. Ashwini, benchmark indices have lost some sheen and some momentum in last 2 days, and this week it's been a nothing sort of a market. We simply have meandered in and around the 200 DMA on the Nifty.
Well, it's been a narrow, tight range, and the main problem here is not the range. The main problem is that the market breadth as well as momentum is kind of coming down. And that means that even if you have a favorable outcome, you could gap up and then lose those gains almost immediately. Some of the signs which are not so positive are that rupee has reversed and tech stocks are now again finding buying. That generally tends to happen when the market is about to reverse. So the idea here is not what will come out tonight or day after tomorrow. The idea is that we have already rallied 800, 900 points. So the upside is basically 50-100 points and the downside could be 55, 5600. Now I don't believe the US Fed will shock the market, but whatever has to come is already priced in. So nothing, the market will not react to $10 billion and chances are will tend to move lower given that already the momentum has started weakening before the event.
Tushar, what's your sense? Because it has been a quick ride for the Nifty from 50,200 levels to now 5850. Do you think that in the short term this is as good as it gets, or the outcome of the FOMC meet would also be critical?
No, I think for the short term we are probably done with what we've reached in the in this huge rally that we've seen over the last 2 to 3 weeks. Not to forget that we have a big event coming up tonight and day after tonight, tomorrow, and then later this week with the RBI governor's maiden policy meeting. So I think that's the other key risk. But having said that, what the kind of indications that we have been getting from FOMC and the Fed Reserve, I would tend to think that, this is where it lasts, and, we could probably now shift down back to the 5,700, 5,720 odd levels.
Tushar, but what about the downside? Do you think in the short term we may not go back to the recent low of 5180, 5200?
In the short term, I don't think we are headed to that stage. I think I would tend to think that you will see people turning buyers around the 5,500, 5,550 odd levels. I think when we went down to the 52, 5,300 odd levels, it coincided with a massive panic situation in India, and especially, if I may use the word, run on the rupee, so to say. That's where it coincided, and it just seemed like there was no stopping the rupee. We've made successful attempts at stemming that kind of a move, and I don't think that panic situation is anywhere around the corner again, which could let the Nifty go back to those levels.
Sandeep, this question is coming your way. At a time when Indian economy is still struggling, the core fundamentals are not looking strong, growth concerns are evident. Do you think it's time to revisit IT exporters and metals?
I think IT exporters and metals have been clear outperformers since the beginning of the year. In fact, I think starting May onwards, we've seen most IT stocks are still up around 20% from May, whereas most banks are still down 25 to 30% from levels which they saw in May of this year itself. So I think the export story will still play out. I don't think the export story is going to go away, because unlike in a normal scenario where if the global economy was slow and not improving, then IT companies would have to give some price discounts in order to grow their business. Now their business is growing off their own, and they can actually take advantage of the fall in the value of the rupee. So I think that adds to their profitability and helps them grow the business.